In today's video, I'm going to teach you how to record a loan in QuickBooks online. By the end, you'll know how to set up the loan, record the funds you received, and enter ongoing payments so your books stay accurate and easy to understand. We'll start by creating the loan liability account. Open the gear icon for settings, then go to Chart of Accounts and choose New. For account type, pick long-term liabilities if the loan will be paid off over more than a year, or choose other current liabilities for a short-term loan. For detail type, select Notes Payable. Give the account a clear name that helps you recognize it at a glance, such as bank loan, lender, save and close. This sets up the place where QuickBooks will track what you still owe, separate from your bank balance and expenses, which keeps your reports clean. Next, record the money you receive from the lender. If the funds were deposited into your bank, click New and choose Journal Entry. On the first line, debit your bank account for the amount that hit your bank. On the second line, credit the loan liability account you just created for that same amount. Use the actual deposit date so your books match your bank statement, then save and close. This entry increases cash while also creating the debt you owe, which is exactly what happened in real life. Finally, let's capture each payment, which includes both principal and interest. Click New and select Expense. In the Category Details area, use the first line for the principal portion and select your loan liability account. This reduces the loan balance. Use the second line for the interest portion and select Interest Expense. This records the cost of borrowing. Enter the amounts based on your lender's statement or amortization schedule, then save and close. Only the interest shows up as an expense on your profit and loss. The principal is not an expense because it simply pays down what you owe. A few quick tips to keep everything tidy. Use consistent names and clear descriptions so you can identify the loan and its payments later. Match the dates on your entries to the dates on your bank and lender statements. If your payment amount changes over time, always split it between principal and interest according to the lender's breakdown before saving. That's it. With the liability account created, the initial deposit recorded, and each payment properly split, your loan balance will decrease correctly, and your interest will appear in expenses, giving you confident, reliable financial reports.